favorite Muadid, muadid.com. Here in continuation from the previous video, let's take a look at the Nifty, and we're going to be looking at the hourly here. The one thing I want to talk about is this area where the market stays below 30.9 on its hourly. Here we are using RSI setting of 26, just to be clear. And I want to talk about this area where you see here the market holding and making this looks like a trough below 30.9 on the hourly. So what you notice here is that generally speaking, whenever you see a market record this type of a stay, in other words, if the market stays below this 30.9 threshold and has this what looks like a trough again, this is not where you get the strongest move in a market. In other words, once you see the market staying below 30.9 and it stays there for a couple of hours, or let's say if you're looking at a daily, it stays there for a couple of days, that indicates that there's going to be a lower low. So put another way, in other words, when you see the market do this, it means that even if it moves higher like it did here, this is not where you want to go long, because you can see it comes back and makes a fresh low, and this is corresponding with this area here. So that was not a buy signal, just like this period here was not a buy, because most people use this as what they call oversold, but that's not true. You have to be very careful. And even though recently we saw that it came off the lows here because it stayed below 30.9, what you observe is that over time it will not be out of question that eventually the market will have to come back and test the lows here and move lower. So let's change here and also look at this from another point of view. And it is the point of view that you are better off waiting for a positive divergence before you can go long. So instead of buying this area here, which most people tend to do because they think that that's as low as the stock can go, remember the RSI is a measure of sentiment. And so what you're better off doing is wait for this to happen and then wait for the stock to make a fresh low in price while the technicals improve. And you can see that this improvement in the technicals here began this nice short-term move, if that's what you're looking for. And also we can see that after recording this low here on the RSI, which is a measure of sentiment, you can see that prices continue making new lows. And at some point there was positive divergence here. That positive divergence started this nice short-term move. Right now, if you are looking for positive divergence, you can see that we haven't really tested these lows meaningfully, so I would suspect that at some point this is going to have to come back to test these lows, maybe even break the lows, and then at that point we are going to have positive divergence. So that type of positive divergence might be when you might want to go long. Now this is a little bit confusing, I do contend that, but I'll marry this and explain a little bit further. You can see this move here middle of December and this move here middle of January. If we take a look at the hourly, in fact let's take a look at the daily, we can see that those two moves, we're talking about the move here and here. Now keep in mind here I am addressing anybody who's looking for short-term entry, maybe for a couple of hours, for a day or two. We can see both moves began. Why? Because we had positive divergence on this line during this low here, lower lows in price, slight improvement on the technicals, and again for the lows coming off this level here, we had a slight lower low in price and the continuation of this positive divergence line. Also we see a double bottom support here on the daily. So all these slight moves coming off the middle of January made sense, and recently on the daily we can see that it formed a nice positive divergence, something like that, because we went to fresh lows on the daily while we see a slight improvement on the technicals here. So on a day-to-day basis there was a reason for the market to have moved recently for about 2 days, but the problem is that now we come and do meet resistance on the top side. We can see resistance if we take a line connecting RSI highs, which is a problem. If you go back to the hourly, you can see that even right now it's coming back to test the break line. So this break line here is now being tested again here and also here. So as long as we see resistance there, the next swing trade should be to the downside. So that's one view. Also, we can see that if we take a line connecting RSI highs, you can see right now it is coming back to test that top side. If that is confirmed as resistance, there's another layer of resistance, and also coming back to test the previous break line. So this break line here is being tested if you draw it like that. So we got 3 lines there. Let me draw one more. So the 3 lines are coming in play right now like that. And all these lines are coming and making contact with exactly where it closed as of the close of Tuesday's action. So more than likely, if this continues to be resistance hour to hour, given that the market continues to be bearish, in my opinion, on a monthly chart, you can see monthly charts are showing RSI and MACDs at 3-year lows. Because the market overall on a monthly chart, the big picture is down, we have to assume that at some point we are looking for reasons to re-enter the market on a short side trade. And that's what I'm leaning towards here, is we are coming back to test what has been a problem for this chart, going back a couple of days here on the hourly with multiple lines coming in contact. That's the second line, and then there's a third line, if I can draw that, coming from the back test. All of them coming in contact right there. Now keep in mind, the reason why I suspect there could be a pullback is if we go back to our previous observation that whenever you see a market spend some time with a trough, and I'm talking about this period here, which is a trough, another trough here, and another one here, generally it tends to indicate that the power of this, in other words, the market was so weak here to record these lows that at some point the prices are gonna have to come and test the recent lows or even break them. Since we suspect that this here was telling us there's gonna be another low, we are looking for any reason to re-enter the market on a short side. Now, I hope that was not confusing. So let me try that one more time. Because here we stayed below 30.9 for a couple of hours, maybe a couple of days there. It indicates that the market is still very bearish, and that at some point, until we see positive divergence, there's gonna have to be some type of a test of these recent lows, and the potential for breaking those lows is still there. So that's what I think here, based on the analysis. More than likely, because the market is coming back to test the 3 lines, more than likely the next swing trade is down. Eric Muaded, Muaded.com. I apologize for the long video, but lots to explain. Peace and blessings. ESCS, I am out.